This is a market preview. Thanks for joining us at xm.com. We'll be looking at the Fed policy meeting coming up on Wednesday and the outlook for the dollar. I'm Cristina Marujos. With me today is our senior investment analyst, Mario Sechikiriakos. Mario's Fed officials have been saying lately that the surge in yields has done the work for them, implying that another rate hike might not be on the table. So what do you think we'll hear from the Fed this week?
Hello, Cristina. Well, I can tell you this much, they won't raise interest rates. So the markets are only pricing in a 3% probability for a rate increase this week. That's almost zero. The Fed doesn't really like to surprise the markets, and they've signaled that they probably will not raise interest rates at this meeting. Now, the important question, I think, Cristina, is whether the Fed will raise interest rates again in the future, maybe in December, or whether interest rates have already peaked. Now, in this sense, as you correctly pointed out, the bond market has done a lot of the work for the Fed. So through the summer and in early fall, what we saw was US yields on US government bonds moving higher and higher. Now, when that happens, it essentially tightens financial conditions. It has very similar effects, if not even stronger effects, than the Fed raising interest rates. So the bond market has done a lot of tightening for the Fed in recent months. That puts less pressure on the Fed to actually raise interest rates again. And even though Chairman Powell would not rule out another rate increase, the markets are only assigning a 25% chance that we see another rate increase later this year, which there is some probability, but it's starting to look like interest rates have already peaked, especially with the recent bond market moves. Now, the US economy, Cristina, is actually doing really well. Economic growth was came in at almost 5% in annualized terms last quarter. The labor market is still really solid, and the US consumer is still in good shape. So overall, the US economy is doing well. That might have supported the notion for another rate increase, but since we've seen the bond market move so dramatically lately, the Fed doesn't really need to raise interest rates again. So the question, Cristina, heading into this meeting is, what will the Fed say? What will they signal? Will they keep the prospect of another rate increase on the table, or are they going to softly signal that interest rates have probably peaked, but we will keep interest rates high for an extended period of time? That's what they've been saying lately, right? This higher for longer narrative for interest rates. So my own view would be that because the economy is doing so well, the Fed is unlikely to take a rate hike off the table. I think they're going to keep a tightening bias, keep that option on the table. And even though that wouldn't be huge news for the market, it might still elicit some market reactions.
And taking that into account, Marios, let's look at the greenback. The dollar has been enjoying strong sessions lately. How could we see it perform this week?
Yeah, so if the Fed maintains a tightening bias and they signal that interest rates could still move higher from here, possibly in December, that could support the dollar a little bit on the news. So it might be a positive reaction in the dollar, but again, I think it's not going to be a huge reaction since this wouldn't really be news for the market. Now, in this sense, I think that the main event for the dollar this week might be the non-farm payrolls report that we get on Friday. Of course, we'll have a different video on that. But overall, as far as the dollar goes, I think that the outlook is still bright. The dollar currently offers the full package, right? So the dollar enjoys the strongest economic growth among the major economies. The United States has by far the highest growth. The dollar also offers the highest yields among the major economies. So the US currency is attractive both from an interest rate perspective and from an economic growth perspective. And then you start to contrast that with other currencies. So the euro has been plagued by recession risks. The Japanese yen has been devastated by interest rates because the Bank of Japan has not raised interest rates yet. And then you have currencies like the Australian, the New Zealand dollars, whose outlook does not appear bright because they have a lot of exposure to the Chinese economy that is slowing down. So long story short, Christina, I think that the dollar looks quite attractive at this point. And At the same time, there's no real alternative to the dollar in the rest of the forex market, especially when you consider that the dollar also has safe haven qualities because it's the reserve currency. So I think that this combination could keep the dollar supported in the foreseeable future.
Marios, thanks so much. And thank you for watching this preview video here at xm.com.